Let us learn about the groups interested in accounting information. Who are all bothered about our accounting data? Why so many are interested to know? Why it is not only the owners? Why there are so many other related stakeholders bothered about the accounting data? Let us see one by one, then we will go into the details. Obviously, to start with, owners are the most interested party in the accounting data. Then comes managers, the people who run the organization, security analysts, who analyze your accounting data to recommend to others whether to invest in your company or not, lenders who give loans to your business, creditors who provide goods and services on credit to your business, employees who work and make things happen for you, government, which is obviously the regulator who monitors what you do, customers who are everything for you because they buy the goods and services that you provide, competitors who compete with you in the same industry, in the same sector, and they try to provide a tough business environment for you to work in. And finally, the research groups, people who study the way you run the business, who study and interpret the decisions that you take, people who study and then develop theory out of what you are doing. And these are all the groups interested in your accounting data. Let us go a bit deeper inside and see why they are interested. We will start with the first group, owners. As owners have invested money, they need to know the performance. In fact, in this entire list, why I placed owners at the top? Because without owners, a business cannot be formed. And unless the business is formed, the other stakeholders cannot come and join. So obviously, the primary responsibility, the primary interest, and also the primary instrument behind any organization is obviously the owners. And because they have dumped in their capital, they have invested money, they are very much bothered about how the business is doing. As we learned earlier, accounting is the language of business. By going through the accounting data, owners will be able to know how the money that they have invested is working. And when I say owners here, obviously the different other jargons like shareholders, partners, all those will come here. So owners is a very general term that we are using here. Then comes security analysts. We can also call them as equity research analysts or research analysts. Analysts need to suggest investments to their clients. Many times people have money, they are interested to buy the shares of the business, they are ready to invest in the business, but they don't know how the business is doing. Probably they may not have the knowledge to learn or to analyze the business. So what they do, they outsource this work to analysts. Or in other terms, they may ask analysts to recommend good investment opportunities. So what the analysts do is they pick up the accounting data of the business, they add a lot of value to the analysis, and then at the end they will come up with a suggestion. It is better to invest or better not to invest in this business. So based upon their recommendations, investments will be done. So obviously prospective investors will listen to security analysts. You might have heard about institutions like mutual funds, venture capital funds, private equity funds, and so on. They all have a team of analysts. They study the business and then they recommend, they tell, should you invest or not. Based upon that, the managers of these funds do make investments. So security analysts personally don't have any interest in your organization. They study on behalf of the prospective investors. Then comes lenders. As they lend money to the business, obviously you need to be interested whether they will get the principal and interest back on time. When I approach a bank and say I require 10 lakhs rupees loan, the first thing the bank will try to check up is, do I have the capacity to repay the principal and the interest on time? From where I get income? What amount I spend? What amount I save? Do I have disposable income to service the loan? The same issues do come up when a business approaches a bank or a lender and asks for loan. How the lender will understand, how the lender will know whether this business is capable of repaying the principal and interest? The only way is to check their accounting data, to know the financial performance of the business, to learn where they stand. That's the reason why lenders obviously look for the financial performance of the business. And how to learn the financial performance? Through the accounting data. The next group is creditors. The need for creditors to know the financial performance is more or less similar to lenders, but for a shorter time frame. For first-time learners of accounting, let me differentiate lenders and creditors first. Are they same? No way. Lenders are different from creditors. How? We will see 3 reasons. How lenders are different from creditors. Point number 1. Lenders give money, while creditors give goods and services. Whenever we say lender, just imagine a bank, a financial institution. You know very well, they can't give you raw materials, they can't give you utilities. They just give money to you for a period. They are lenders. But our suppliers, our vendors who gives us goods and services on credit, they are called creditors. Reason number 2. Lenders may lend for short term, medium term or long term, while creditors give goods and services for short term. You can borrow money for 1 month, for 3 months, for 3 years. Whereas when I say you are buying goods and services from suppliers, they normally give a credit of say 1 week, 2 weeks, 1 month, 2 months. It is essentially short term. You can't say, today I will buy goods from you and pay you after 5 years. Normally this credit facility is offered to buyers so that they can do the business and quickly earn some return and then give back the money to the creditors. It is normally and obviously for short term. You can't expect long term credit from creditors. Point number 3, normally lenders charge interest while creditors don't. Because the whole idea of lenders is just to give you money and earn some return out of it. They should obviously charge interest. Whereas creditors don't give goods and services on credit to earn interest. They primarily do business of selling goods and services. Just to facilitate better business, they offer credit. So normally, openly they don't charge interest. They may hide it in the price, but explicitly they don't charge interest. So coming again, lenders and creditors look for accounting data for the same reason. Can they get back their money on time? But definitely lenders are different from creditors. We have seen 3 reasons for it. The next group is employees. Employees need to know the accounting data so that they can know what to expect from the organization. You know very well, employees form part of an important stakeholder in the entire organization. They make things happen, and because of them, everything happens. But unfortunately, in many businesses, employees are not much bothered about the accounting data. Either they don't know how to read the financial statements, or they are not much interested or knowledgeable, whatever be the case. But let me tell you why employees should know the accounting data. Let me start from a very, very optimistic situation down to a pessimistic situation. Point number 1. Assume employees get profit sharing bonuses. Unless they read the accounting data, they won't know whether the business is making profits or losses. Unless they know whether they make profits or loss, they won't be able to know what is the share in the profits that they can expect as bonus. So obviously, they should know the accounting data. They should know how to read the financial statements. Let me come down to the next level. Forget profit sharing bonuses. At least to know how the business is doing and what type of increments they can expect in the coming year, they should know the accounting data. If they are quite aware of accounting data, they read, they understand, and they learn, they are doing very good, definitely they can expect a better increment in their salary in their upcoming periods. Otherwise, they can understand, don't expect much. Coming down to the third level, forget profit sharing bonuses, forget even increments. Will I get monthly salary on time? Whether the business has enough cash to pay monthly salary? Are they very worse, or are they going worse? Are they going bad? Do they have enough liquidity? Do they have enough money to keep running the organization? At least to know this, they should be able to read the accounting data. Coming down to the fourth, last point. Forget profit sharing bonuses, increments, even salary on time. They should at least know whether the business will be in existence, or whether the situation is so bad that the business may close down anytime. One day when your manager calls you and says, we are closing down the business, it should not be a shock for you. In fact, you should not wait till that date. If you know how to read the accounting data, you will be able to understand where the business is heading. If you know that you are in a Titanic, one, try to save it. If not, try to save yourself. And you can do all this if only you know the accounting data, how to read them, understand, so that you can learn the business. And these are all the reasons why employees should obviously know, and they are very much interested to know the accounting data. Next in the line is the government. Government need to know the accounting data so that they can regulate the business and also collect tax for the profits made. You all know very well, that whenever a business makes profit, a portion of that should be shared with the government in the name of tax. So unless the government knows what profits you have made, unless the government reads your accounting data, they can't be sure whether you are paying the tax properly or not. That's why government is much bothered about your accounting data. Many times when I teach this in the class, students will be wondering, why should customers bother about the accounting data? Customers need to know the accounting data so that they can decide on the long-term association. If you are just going to buy a soap or a toothpaste, you need not bother about the accounting data of the business. But if you are going to have a long-term association, then obviously you should know. Whenever you buy a car, you have to check up whether the business will be in existence for quite long so that you can get the car serviced on time over a period of time. Assume a company sets up its own production center, sells all the cars they produce, and then they vanish. Where will you take the car for servicing? If you want spare parts, where will you go for? So obviously, as a customer, when you wish to have a long-term relationship, you should bother about the accounting data through which you should be able to learn whether this business will survive for long or will it collapse. In that case, what should I do? And that's why customers are very much bothered about the accounting data. Why competitors are bothered about your accounting data? Competitors need to know the accounting data so as to understand the market position. Every player in the industry wants to know where they stand in the market. Are they better than their competitors or worse? And unless you have the accounting data with you, you won't be able to answer this question. In fact, in the present competitive scenario, many organizations have created separate departments, cells in their own organization to just monitor what the competitors are doing. The competition level is so high that everybody is so much interested to know, are we better than others? And that's why competitors are so much interested in your accounting data. Many times, the publicly available information is sufficient, but sometimes even not so publicly available information will be so important for every player. And finally, research groups. The primary purpose of research groups is to understand the fundamental issues and develop detailed knowledge. Many research scholars do research with various annual reports of the organizations. Even in classroom, many times, students pick up an annual report just to study and learn the contents, what are the data given, why they are given, and how they are presented, and so on. So the whole idea is to develop a detailed knowledge on the basic accounting and how it is reported. Thank you.